Hello, Warren and Charlie. It is great to see you both and the wonderful Berkshire managers. Our thanks for everything that you do. My name is Rajiv Agarwal, and I am from New Jersey. My question is on market timing. You have always said that it is impossible to time the markets. Yet, if we look at your track record, you have had amazing timings with some of your key decisions. You got out of the stock markets in 1969-70. You got back in 72, 72, 74 when the markets were really cheap. You did the same thing in 87, 99, 2000. And today, we are sitting on a significant amount of cash when the markets are going down. My question is, how do you time the big market moves so well?
We'd like to offer you a job first.
I will take it.
The interesting thing is, obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. And the interesting thing is, sometimes I get some credit someplace for the fact that, how wonderful it was that we were optimistic in 2008 and when everybody was down on stocks and all that sort of thing. We spent a big percentage of our net worth at a very dumb time. and I shouldn't say we, it's I. We spent about $15 or $16 billion, which was a lot bigger to us then than it is now. We spent it in the last few weeks. There was a period of 3 or 4 weeks between Wrigley and Goldman Sachs and General. At a terrible time, as it turned out. I mean, I didn't know whether it was going to be a good time or a bad time, but it was a really dumb time. And I wrote an article for the New York Times and Buy America and all these things. Well, if I'd had any sense of timing and waited 6 months until, I think the low was in March, and in fact, I think I was on CNBC maybe that day or something, but I totally missed that opportunity. I totally missed, in March of 2020. We have not been good at timing. We have been reasonably good at figuring out when we were getting enough for our money. And we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more, and we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying, and in fact taking our interest up. I mean, that's stuff you could learn it in 4th grade, but it's not what's taught in school. And I mean, so never give us any credit. Well, actually, give us all the credit. I mean, go out and tell everybody how smart we are, but we aren't. We haven't ever timed anything. We've never figured out insights into the economy. I mean, when I was 11 years old, March 12th, I guess, 1942, March 11th, I bought stock when the Dow was 90, well, it was 101 in the morning. It was 99 at the end of the day, I think. And, now it's 34,000, or maybe it's 1,000 less than it was on Thursday. But I just, it's one decision that it's a good thing to own American business. And if the Harvard endowment had come to see me, and it's 11-year-old, and or General Motors pension fund or something. And they say, well, no, but we have to have a balance, and we have to maybe have 60%, and then we have to sit around every 3 months and listen to a bunch of managers. They'd have just done better if they'd just taken some darts and thrown them and just said, we're going to be in America 50 years from now and 100 years from now, and we'll do better in stocks than we will in bonds. It's amazing how hard people make what a simple game it is. But of course, if they told everybody what a simple game it was, 90% of the income or more of the people that were speaking would disappear. So there's really a little too much of us to expect of human nature that people will explain why they really aren't adding any value to what you can do by yourself, or actually I hate to use the example, but you can have monkeys throwing darts at the page, and take away the management fees and everything. I'll bet on the monkeys, but I don't consider them a superior species, and I don't want them to move next door instead of my next door neighbor or anything. But that is the way it's just the way it has to be. Charlie, do you have anything cheerful to say?
Well, frequently in the wealth advisory business, the way it used to be, you go to your investment advisor and you say, what should I do to protect myself for the future? And he says, why don't you give me $50,000 of your net worth now? That's my contribution to your future. It's a peculiar business.
Yeah, it's a great place to go rich. Still, if you have a son or daughter that really wants to make money per point of IQ and per erg of energy and all of that, well, tell them to go to Wall Street. I mean, don't have them enter the priesthood or anything. I mean, if that's what it self-selects, and it always will be the case. I mean, there's no reason to despair about humanity because they behave in their self-interest. They may not actually be behaving in their self-interest over time, but they, are they happy or who the hell knows? But if they just want to make money, people here in the auditorium saw a little session from the Solomon episode, and Jerry Corrigan was then the head of the New York Fed, and that same committee was grilling him, and they said, Mr. Corrigan, they were giving him a hard time, and they said, who was the highest, they said something to this effect, who was the highest paid or guy at Solomon last year, and he said, well, and he named him. He said, maybe he named him, and he said he got, I forget whether it was 20 million last year, and we're talking 1991 now too. He said, he got 20 million, and the guy says, well, how old is he? And he said, well, I think Corrigan's somebody affected. He's 26 or something like that. And then Corrigan couldn't resist saying, and he can't even throw a football. And the truth was, now there's a lot more money in throwing a football now than there used to be. One of my heroes was Ted Williamson. I think he was making $20,000 or $25,000 a year, and just imagine today some guy that bets 230 or 240, and if he makes it to the bigs, I mean, the money flows in, and of course, those people should sit down and thank the fact that the stadium that could hold 30 or 40,000 people and was the source of revenue for the people who paid their paychecks. That stadium went from 30 to 40,000 because somebody first invented television, and they came up with cable television, and they came up with pay and all that sort of thing. And nobody knows the names of those people. But capitalism is very, very, very peculiar in how it dishes out rewards. And for a while, it was better to be in Wall Street than be at 220 or 230 here in the bigs. And it is now reversed because of the development of TV, et cetera. So it's a crazy world. Rewards seem very, 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 very capricious, and they are. And they don't seem to any theologian or even to Charlie and me in our spare time. The whole thing seems kind of crazy, but it's worked awfully well. And even the people who don't take advantage, get shortchanged by the system, are doing far, far better than if the system hadn't gotten changed. Doesn't mean that you necessarily shouldn't work for change, but you should recognize the limitations of what you can do with humans, I'll put it that way. Okay. Charlie, is there any way you'd like to close the sermon?
Well, I do think we have a very interesting phenomenon. I would argue that in a lot of the wealth advisory business, people are charging for skill and delivering closet indexization. In other words, nobody can stand being that different from the crowd in results. They're afraid they'll lose their fees, so everybody does the same thing. It's mildly ridiculous. The world is mildly ridiculous.
Yeah. But as Charlie pointed out in the movie, which only the people here saw, that before we were married, we tried to convince a couple of young women that we were really more attractive than we were. I mean, you can't expect people not to behave in their self-interest, and that was very important. That we didn't disclose all of our weaknesses before the marriage. So,
Warren, we're trying to be a little better.
Yeah,
we may fail a little, and I don't know about you, but I've slightly improved since I was 17.
Yeah, well, that's a really interesting point, because if fortune has just showered you with all kinds of good things, you ought to be a better person in the second half of your life than the first half. I mean, really should not be asking too much of people if they've won the ovarian lottery and all kinds, they're born in the United States and all kinds of good things have happened to them, and you've had a chance to see how stupid you were in all kinds of things you did. Why not have the second half of your life be better than the first half? I mean, and I would say, working from a very low base, but I mean, I'm not nearly, by any intelligence test or ability to do any of that, I haven't learned anything, but you do learn certain things only by interacting with people. And you don't know when you're 2 years old, no matter how much you're picking up all kinds of knowledge from the world. The learning machine that's going on in a 2-year-old's head is just unbelievable. But it's not the same as having 30 or 40 years of experience with actually how the human animal behaves, which is you're learning all the time about it. But that should make you a better person in the second half of your life than the first half. And I would say that if you say you're a better person in the second half, if you've got reason to say it in the first half, forget about the first half. Enjoy the second half. And I think both Charlie and I have had the luxury of living a long time, so we get to play what we would regard as the hopeful and expectable second half. And we have had enough sense to figure out, we figured out what makes us happy, and we've gotten somewhat more sensitive to what can make other people unhappy and all that sort of thing. And I'd rather be judged by the second half of my life than the first half. And so would Charlie.
Yeah, of course.
Okay.
I don't even look at what I did when I was young because it would embarrass me.
Yeah. Okay.